Hello, everyone. Is my voice audible to each and every one of you? Can you all hear me? All right. So I welcome you all to the ACCA Taxation English Reset Orientation Batch. My name is Saniya Asif, and I'm going to be your mentor at VIFHE. This is my brief profile. I've been into this field of teaching taxation as well as advanced taxation for the last many years. It's been about 19 years since I'm teaching taxation. You can find my presence on the official website of ACCA by clicking on this link as well. I'm just going to rush through all such formality oriented things, and I just want to coordinate with you people on the real issue for which we have designed, we have actually set up this whole thing. So before that, I start with the syllabus area related to taxation. I want to ask you one thing. Is this like going to be your first attempt, or you have attempted the exam of taxation before? Is this the first time you're going to appear for taxation, or have you taken the exam for taxation before? All right. So I would like to ask you that had you been able to complete your exam on time? Had you been able to complete your exam on time? All right. So the issue was about the content. Okay. So let me just take you to what we are offering at VIFHE. There are basically many types of taxes, out of which few are very important ones, and they are there in your syllabus. And you do not have a choice to pick and choose that which type of tax you would prepare for the exam and which is not. It's like each and every type of tax is important, which is there a part of your syllabus, and you will have to prepare for that, right? And then it's like there is the most important type of tax for which maximum chapters have been allocated. I mean, the maximum content of the whole syllabus is related to this type of tax, and this is called income tax. This is the type of the tax which is gonna be payable by individuals. Those individuals who are residing in UK, who are UK resident people, they have to pay income taxes over the regular sources through which they receive income. Then there is another important type of tax that's called corporation tax. As the name suggests, this is the type of the tax which is to be paid by companies, the corporate bodies, the registered businesses, whatever the source they are going to receive their income from, they will have to pay corporation taxes. And then there is another type of tax which is called capital gains taxes, which is once again gonna be paid by individuals with respect to the profit that they generate on the disposal of non-current asset. Non-current asset, or precisely the chargeable asset, this is not the routine thing with which someone is receiving an income. This is like a one-off activity. So whatsoever an individual is going to dispose of their chargeable asset and they're going to generate a gain, they will have to pay this type of tax, which is called capital gains taxes. And then there is another important type of tax which is called inheritance tax. As the name suggests, this is like gonna be paid by individuals, but over the inherited properties. Whensoever there happens to be an inheritance, whensoever a property is going to be passed from one person to another person, this is basically the situation where we say that inheritance has taken place, so inheritance tax shall apply. And last but not the least, this is the value added tax, being the sales tax. It is imposed on the selling price of the product, and it is always gonna be payable by individuals. So whensoever, the consumer, the customer. So whensoever there's any customer, there's any purchaser, whosoever is like going to purchase anything, A VAT is charged by the seller of that particular item if that seller is like registered with HMRC for sales tax purposes, for VAT purposes. And if the sales tax is charged over the selling price of the product, there the customer shall have to bear the burden. But we will discuss so many things in detail later, that finally the burden of the VAT is to be borne by the ultimate consumer, as one person who is like going to purchase anything shall keep on passing the burden of VAT to other person unless and until there happens to be a final consumer in the whole story. So these are basically five types of taxes which are there in your syllabus. And specifically this session, which is like a very short session, afterwards I'll connect to my regular students and I will like keep on discussing a normal practice thing with all of you. Right now, the purpose of this short session is to communicate that what had been the problem while you had attempted your exam last time and unfortunately you wouldn't have been successful. First of all, if I say that the problem was related to time management, if the problem is something which is time management, which is like the problem which has to be faced by a lot of students, then keep this thing in mind that you really need to have a good grip on the practice. For instance, if I'm a student, I learn something. I tend to go through some subject for the very first time and I'm going to sit for their exam. And I haven't done a relevant practice, an appropriate level of practice. So there, when I enter the exam hall, I just keep on like jotting down certain things. I just keep on like making a plan and then writing it down, then start thinking again. So this is like going to consume a lot of time. If I really want to be vigilant one, if I really want to be an efficient one, if I really want to complete my exam on time, for that purpose, I should have practiced numerous questions before appearing in the exam hall so that the moment question is shown in front of me, I would not be taking a lot of time in planning and deciding about the things. I shall instantly go in a phase to execute the whole thing. I shall exactly go into a phase where I start writing down, where I start typing down, and start like exactly constructing a response for which my examiner is going to give me a reward. Basically, he's like going to give me a score for that. So practice is an essential key for the sake of time management purposes. And practice through mock. I mean, if all the students who have taken the mock, they must be finding themselves having an edge, because if you have taken a full-fledged exam before appearing in the real exam, then let me just tell you one thing, that you are not going to be in a state where you start panicking, where you start thinking that the things are not going to be managed by me. So if you have taken up a mock, the whole exam, which is like developed by ACCA preferably, before actually enter into the real exam center, that is like going to provide you a benefit. You would know that how much time you will have to spend on section A, how much time you will have to spend on the rest of the questions, and how you will have to take care of all of the things, right? So the thing is that that one must know exactly that what he's going to do in the exam center before the exam starts, right? So time management while doing the practice and taking the mock, that is the most important thing. And then covering the whole syllabus. Sometimes what happens is that we tend to leave a certain topic or certain chapter. And if unfortunately the question is like tested from that particular chapter, we actually become uneasy while doing the answer. And what we usually do is that if I have seen that, let's suppose question number, let's say question number one is about the topic which I haven't prepared, then for the rest of the questions, I just keep on thinking that I still have to deal with a question for which I know nothing. So this is like some things which create a psychological pressure on the minds of students, which is why I recommend that whole of the syllabus shall have to be covered before appearing in your exam. Though I believe that you will not be mastering, you will not be excelling in each and every topic, but at least you should have seen each and everything. There is like nothing for which you would say that I know nothing about that thing. No, this shouldn't happen. You either be knowing about certain things, or you must be like have excelled in certain thing, but going completely blank for a certain topic is like not something which is appreciated. Okay, here is the exam pattern. I hope you people are already familiar with. In your exam, which is going to be a computer-based exam, it's 3 hours long. It's of 100 marks in total. And at least you need to score 50 marks to pass your exam. And your exam will be consisting of three sections, section A, B, and C. Section A will be having 15 OTs. The objective test question, by objective test question, either you will be given with a multiple choice question, a multiple response question, maybe a fill in the blank, which we call as hot area. Maybe you will have to match the different options with their different answers. So it's like might be a drag and drop activity, or choosing the most suitable option activity. So there are lots of short style activities with which section A is going to be tested to you people, and you'll be expecting 15 OTs to be tested this way, and every OT will be carrying 2 marks. So that's how it will be of altogether 30 marks. While in section B, 3 OT cases will be tested. Each OT case will be carrying 5 OTs, and every OT shall be of 2 marks. So that's how, again, this section will be carrying 30 marks. While dealing with section A and section B, your answer matters. So as long as your answer is correct, you will get 2 marks. Otherwise, your working does not matter at all. Whether you perform any working or not, or if you just do a random sort of working, a randomly incorrect or correct working, it, technically your examiner doesn't want to look at what kind of working you have performed. Maybe you will be given with an extra sheet for the sake of like doing such things, or maybe you will have to perform the working on the notepad, which is like there within the portal, exam portal. But the thing is, the working is not going to be checked. And it is not even essential that you would be performing any sort of working if you are good at like doing the mental maths, and maybe 70% of the questions are like being done either on the calculators or by just simply thinking the whole process in the mind. That's perfectly fine. As long as the answer is correct, your examiner will give you 2 marks. But of course, with taxation, I believe that majority of the questions should be somehow worked out. I mean, a certain approach needs to be done in order to get to the answer. But whatever the format, whatever the style you are carrying while giving an answer related to section A and section B, that is not going to create any difference to your examiner. So when it comes to section 3, the section which is section C, this will be carrying 3 constructed response question, and here the working matters. So if while doing the working, examiner sees that 80% of the working is correct, he will definitely be giving you the marks accordingly. So in section C, you will be expecting to receive 3 questions. Question number 1, which is going to be of worth 10 marks. Question number 2 and question number 3, each will be carrying 15 marks. So that's how section C will be of 40 marks worth, where once again, the answer doesn't matter, but the working does. Okay, so question number 2 is like decided it will be taken from income tax rules, while question number 3 will be tested from corporation tax rules. But we do not know that from which area question number 1 is going to be tested. But whatever the area, they will be picking up for the sake of like making question number 1, it would surely be having some element of planning in it. Maybe they would say that there is a person who has a trading loss and he's like indecisive whether to carry back the loss or to carry forward the loss, and they have given you the data and they tell you that which option is going to be more preferable. Of course, you'll have to work out the whole situation, I mean both ways, and then you decide that which option is eventually resulting into a maximum saving of taxes. So this is like the kind of like having some sort of planning element in it. So questions somehow carrying this kind of tempo will be tested within question A. We do not specifically know whether your examiner is going to test that particular scenario with respect to capital gains taxes or inheritance taxes or even for income taxes. But one thing we know that it must surely be carrying a little bit element of the planning as well, right? Till now, do you people have any question in your mind? If yes, then please let me know by dropping your concern in the dialog box. All right, so as you people do not have any questions, I'm moving towards another important thing, and that is what is being offered at VIFHE. Number one, the whole of the syllabus is being given to you people in the form of recorded sessions. And let me just tell you that all the videos related to all the chapters are of about 60 to 61 hours. In fact, it's like 61 hours and few minutes precisely. So if you start doing your syllabus coverage from now, from today onwards, you will be needing 30 days in order to cover each and everything if you tend to spend 2 hours on daily basis, right? And if you do have a capacity to spend 2.5 hours, then the whole of the thing will be covered in less than 30 days. And there's one more thing which I have already told to my students that no, when you just log on to a video, the videos have been recorded at a relatively slower pace in order to accommodate every type of student. I mean, student from different ethnicities are connecting to our portal, which is why we have deliberately recorded the session at a relatively slower pace. So majority of the students would do what? They increase the pace at which videos are to be listened. Usually they increase the pace by 1.5. So if you are going to spend 2 hours on daily basis and the videos are going to be watched by increasing the pace to 1.5, you would be needing even lesser than 30 days in order to complete your course. So it is like going to be around 23 to 24 days to cover each and everything. Right now, today is 17th of January. And if you're not going to either increase the pace or you're just spending 2 hours on daily basis without taking a gap in it, then by 17th of February, you would have covered each and everything. But I know the fact that at this point in time, usually students try to spare more than 2 hours for the sake of covering their syllabus. So if you just uh, uh, spend 2.5 hours on daily basis, then maybe in the first week of February, you would have covered each and everything, and there you will have a lot of things left behind. You'll have ample time for the sake of doing the practice, for doing the revision thing and all. So this is like quite a comforting thing. If you just develop a discipline of spending 2.5 hours on daily basis, then definitely, in the first week of February, you would have covered each and everything. You will have ample time left to cover the practice thing, to do the revision of what you have seen, for what you have like actually watched through the recorded sessions, right? And I there's like one more advice which I would like to give you people, that the moment you start watching the recordings, number one, keep this thing in mind that you will have to watch the recording in a sequence. First, you'll have to cover chapter one, then you have to go to chapter two, then three. It's never like that you will be selecting and choosing that let's do chapter 7 first or let's do chapter 9 first. No, don't do this. Go in a sequence, number one, as one thing is always connected with the next one, or somehow they have some sort of like a kind of connection in between them, so it's always preferred to follow a sequence. Secondly, I have given you e-notes as well as PowerPoint slides through which I mean whatever the sessions we have given you, the recorded sessions, they are for learning purposes, but a recording could be watched only for once. So whenever you want to revise and re-revise the things, you really need to have e-notes in front of you. So what you need to do is that from the very first day when you start watching the videos, you'll have to take the printout of e-notes or the PowerPoint slides PDF. I mean, whatever you are comfortable with, I've given you both of the options. So once you have the hard copy in your hand and you are watching chapter number one, whenever you come across any important thing which you find that it's not there in the notes, or maybe this is there in the notes but you have learned it in a different way, you have grasped the concept in different way, or you have suddenly noticed a very important thing, so you just need to write that point on your notes. So by the time you would have finished watching all of the recordings, you will find that all of your e-notes or maybe the PowerPoint slides that you are using, I mean the PDF or PowerPoint slides that you are using, they might have been converted into comprehensive set of notes, which will definitely help you at the point of revising the whole of your syllabus. Obviously, once you have covered the syllabus, you will not be watching each and every video again for the sake of revision purposes. It's a time consuming process. So all you need to do is you will have to turn your e-notes into a productive set of notes, right? And every week we go live for the sake of doing the practice. And I conduct my live classes on Saturdays. But you normally, if I talk about the students who have already connected to us, they have connected to us since 1 month. So it's like this is the fourth live class that I'm going to take with them right now today. And I would like you people to be a part of it as well, so that you may come to know that how the practice is done. But it's like the planner is given to you people, it is there on the portal, and with the help of planner, you'll have to decide that in how many days you will have to cover a certain set of chapters, so that you may become able to deal with the live class. And if in case you are not going to be able to watch any of the live classes, or maybe about those classes which have already been done, the recordings are definitely there. I mean, everything that I conduct online, its recording is to be provided on the portal, right? And then once the whole syllabus will be done, then we'll be conducting a grand revision session. Then the mock exam will be taken up. I'll check the mock. I'll give you a detailed feedback. And every week when I'll be taking live classes afterwards, an assignment will be populated, and I would urge you people to do the assignment, submit it back, and these assignments are going to be checked. And that's how you will eventually come to know that how your progress is going, right? We are giving you a facility of WhatsApp group. There you can connect me whenever you come across any ambiguity, any problem, any reservation. I mean, anything that you come across with respect to taxation, you just need to drop your concern in the WhatsApp group. I'm there. I would always be there to help you out on as soon as possible basis, but my teacher assistant is also there. So uh, it's not just me, but there are other team members as well who are basically there as a part of your WhatsApp group support members. But as far as the technical queries related to the concept of taxation is concerned, it is, you will find it's always me who is answering you. Right? at VIFHE. This is my contact number. This is the contact number of support team. This is the global group which I urge people to join. Is my voice audible? All right. So now, if there is like any question, any apprehension, any reservation in your mind, please let me know by dropping your concern in the dialog box. So as though there are no questions from your side, I think we shall now revert to the normal practice session. Thank you so much for listening to all the things which I find essential for the sake of be a part of VIFHE, be a part of our portal. And of course, it's not always about just be a part of any group, doing right things at the right time in a right way. I mean, the counseling for such things should definitely be given. So, for the sake of that purpose, the reset orientation batch was set. So, I just hope that you must have grasped the real concept behind this thing. Now, I am going to take you to the practice question, and we do the practice from Kaplan Kit. If you want to have an access to uh, the soft copy of Kaplan Kit or any other resource, kindly be a part of our global group, because you will find a lot of students who are in the same boat. I mean, they are going to take their exam in March, and they would happily be assisting you. They shall provide you all such resources if they have. And secondly, all those students who had not been able to pass their exam in December, and they are thinking that whether they need to take the exam once again in March or in June, let me just tell you that whatever you have learned till December is gonna be tested in March attempt as well. I mean, the same rules will continue to apply in March, but afterwards the things will be changed. I mean, in June 2026, the new Finance Act will be implemented. And if I compare with how much of the change I'm expecting in the next Finance Act, there is a very minute change. You may say 3 to 5% changes are there since what you have learned in Finance Act 2024 and what you're going to learn in Finance Act 25. For instance, if you do not take your exam in March and you decide to take your March next in June. So there happens to be a change in the Finance Act as well. Okay, so the question that I am going to discuss with you people is, it is being taken up from past exam question. As you all know that in Kaplan Kit, there are past exam questions, but the beauty of these questions is that they have been adapted according to the latest Finance Act. I mean, right now the Finance Act which is gonna be tested is Finance Act 24. So they are all adjusted according to what is being tested in the upcoming exam session. Here you go. The name of the question is Poppy. Kindly start reading the question and then I'll discuss the solution with you people. I'm gonna scroll up the screen. Have you all gone through the question completely? All right. So let me just take you to the first requirement of the question. Uh, it says that assuming that Poppy claims loss relief against her total income for the tax year 24-25, we need to calculate her taxable income for the tax year for this tax year. So this part of the question is carrying 10 marks, right? So as you have seen that the loss has happened in the tax year 24-25, and Poppy would like to make an adjustment in the tax year 24-25, which would mean that she would like to make an adjustment in the same tax year, in the current tax year. And whensoever the losses are to be adjusted in the current tax year, I mean the year in which loss has been generated, then the loss will have to be adjusted against total income less qualifying interest. And that would mean that I shall have to first figure out what the total income for Poppy is for the current tax year, and then I will be able to make an adjustment in the same tax year, right? So let me just make the proper format for tax computation, as we have to calculate the income and it is to be segregated into its relevant columns. So I believe that I should make the three columns, but you need to tell me that do I just need to adjust the losses, or after the adjustment of losses, I will have to calculate the tax liability as well? I'm repeating the question. Do I need to just adjust the losses, or I'll have to make an adjustment of losses, and then whatever the income is gonna be left behind, I shall have to apply the tax rates as well? What should I be doing? I mean, what am I exactly supposed to do? We just need to adjust the losses because they're saying that she would like to make an adjustment in the tax year of 24-25, and then after the adjustment of the tax year, one is going to be left with net income, and then after deducting the personal allowance, we need to calculate her taxable income, and we will not be going towards the calculation of tax liability. The tax rates are not going to be applied. So instead of like making three different columns, non-saving, saving, and dividend, if you're not asked to compute the tax liability, you may simply make only one column in which you will be accommodating the whole of the income, and then you'll be deducting the interest paid on qualifying loans, you'll be adjusting the losses, and then the personal allowance, and that's how you come to know what the taxable income is. So this is like something which I've covered in my recorded session as well, that if you have been asked to make an adjustment of losses only and you're not asked to like apply the tax rates, then it's like convenient if you will be making only one column, right? But it's like up to you. Even if you want to make three columns, then that's fine. It is not going to be penalized at all. So here I shall be mentioning the name of the person, Poppy. What we are going to do, this is like income tax format that we are basically making. And then we need to mention the tax year, which is 24-25, right? Though normally we have non-saving, saving, and dividend column, but here I'm just going to make only one column, which is about total, in which I'll be mentioning each and everything. So it's taking a start from scratch. It is said that Poppy is employed by Zoon Public Limited Company. She's also a member of a partnership. The following information is available. So during the tax year 24-25, she was paid a gross annual salary of £65,000. In all of the salary shall have to be taken into account, and the salary as it belongs to non-savings column, I mean salary as it belongs to employment income, generally taken under non-savings income column, but here I'm just going to take everything into account in the same column. Then during the period from 1st August to 5th April. So this is not about the whole of the tax year. It's about August, September, October, November, December, January, February, and March. So it's like 8 months and 5 days. I'll be ignoring days. So it's about 8 months for which we'll be doing the calculation with respect to what? With respect to diesel car, which is given to Poppy by Zune Public Limited Company. It is having a list price of 21800. Though the car had cost the employer 20,600, but it's always the list price on which we shall be computing our benefit for car. And the official carbon dioxide emission is of 75 grams per kilometer. The car does not meet RDE2 standard, while Poppy was not provided with any fuel for private use. Now, the thing is that whether the car is being given by employer to employee for job related purposes or for non job related purposes, as the question does not tell us anything. I mean, for what use the car is being given, then if nothing is told, I believe that this is being given for non-job related purposes for which the benefit shall have to be calculated, the tax liability will have to be paid, right? But it is explicitly said that no fuel was given along with the car. So I'll not be like, definitely not indulge myself in the calculation of fuel benefit at all. Okay, so first of all, I think that on the basis of carbon dioxide emission, which is 75 grams, I should calculate the percentage. This is basically working one. For car, I am doing the calculation. First of all, I am going to figure out the percentage. The car's carbon dioxide emission is 75 grams, out of which till 55 we have a standard percentage of 16, and the remaining grams. So it's like equal to 4. And because 20 divided by 5 would mean 4% for additional carbon dioxide emission. Then by 4 grams as well, 4 percentage as well. Why? Because it's a diesel driven car, and above all, it is something which is not fulfilling RDE2 standards. So what's going to be the percentage? It's going to be I think 24%, right? So what the cost of the car is, here we shall have to pick up the list price of the car. The list price of the car is 21,800. 21,800 being the list price. There is no additional accessories fitted into the car, and then there is no capital contribution in the question as well. It has to be multiplied with the percentage, which is 24. I'm just going to put a sign of percentage with it. So the benefit turns out to be 5232. Now, once the benefit is calculated, we need to see that for how many months the benefit has been used, as the benefit has only been used for 8 months. So I'm just going to apportion the benefit on 8 months. So there happens to be a benefit figure of 3488. If there has happened to be any use contribution, then the use contribution figure shall have been deducted against 3488 pounds. But here there is like no information related to use contribution is given. So I'm just going to take this value as it is. So it's column C, cell 24. Here is the answer 3488. I'm just going to paste the cell information is equal to C24. So 3488 is the value of benefit. Benefit is a part of employment income and hence shall have to be taken under non-savings income. But since I'm not segregating income over here, so it is to be taken under the column of total. Now, It is said that during the tax year 24-25, Zoon Public Limited Company provided Poppy with the two mobile telephones. The telephone had each cost 480 when purchased by the company in March. And again, for what purpose? Is it like given for job related purpose or for non-job related purpose? Nothing has been mentioned. So when nothing has been mentioned, I would believe that this must be given for non-job related purposes. Okay, could you please tell me that what has to be the tax treatment in respect of the provision of mobile phones? Okay, so whensoever one mobile phone, yes, you're right. Whensoever one mobile phone is given for private purposes, that is exempt, and the rest is taxable. So, as each mobile is costing 480, first mobile is exempt, but I shall be computing benefit for the second mobile, as mobile is an example of an asset, and whensoever an asset is given for general use, it is always the cost of asset, which should be multiplied with 20% in order to see what the benefit is. Though the benefit has to be month portioned if the asset has not been used for the whole of the year, for the whole of the tax year. But considering nothing has been mentioned in the question, which would make us believe that mobile would not have been used by Poppy for like lesser months. She must have used the mobile for the whole of the tax year, which is why no month apportionment shall be made, and there is like no information about use contribution given in the question as well. And then they are saying that all of the taxable benefits provided by Zoon Public Limited Company to Poppy are payrolled. So this is like the administrative procedure through which the benefits when given by the employer to employee, even its information is like gonna be executed to HMRC through payroll purposes. So it's like a general administrative line. Now there happens to be a partnership. She started her partnership with Rose and Teasel since 6th April 25th, but Teasel resigned as a partner right there on 6th of July 2024. The partners have always shared profits equally. Okay. So for the year ended 5th April 2025, the partnership had a tax adjusted trading loss of 19,500, but this figure is before taking into account of capital allowances. So that would mean that this figure is not completely adjusted. We still need to take into account the calculation of capital allowances. Once capital allowances are calculated, they are to be adjusted against the trading profits or trading losses. And once the figure for trade will be fully adjusted, then we will be like executing our further steps. So first I have to see that how what the capital allowance figure will be. They say that the only item of plant and machinery owned by the partnership is car with a carbon dioxide emission rate of 90 grams per kilometer. So generally speaking, this car must have become a part of special aid pool. But there happens to be a twist in the story because the same car is used by the owner, Poppy, for dual purposes, as 70% of the mileage was for private journey. So she was like using this car only I mean, for business purposes, only for 30%. That is why this is to be treated as an asset with personal use. The tax written down value of the car as at 6th April 24 was 8,400, and the car was then sold on 31st July for 5,400 and was not replaced. So this is like only one car which was an asset with personal use, and this was like above all sold in the current period as well. So we shall be determining the balancing allowances or the balancing charges, because with asset with personal use and short life asset where the assets are not pooled, every asset is given a separate treatment. So when such assets are sold, we shall either be experiencing a balancing allowance or the balancing charge. So I'm just going to do the calculation with respect to capital allowances. So this is what is their period of account. This is the most important thing which I need to determine first. Okay, there's a question that I need to discuss this thing again. See, the list price of the car is 21,800. Just have a look at this. The list price of the car is 21,800. It's always the list price, the standard price of the car that we need to pick up for the sake of computing the benefit, and it needs to be multiplied with the percentage. As here the percentage is 24, but here this is actually the cell number which is being shown. So list price, if there is like any capital contribution paid by the employee, then it should have been deducted when the maximum capital contribution that needs to be taken into account is restricted up to 5,000. But then whatever the list price is, that needs to be multiplied with the percentage which is dependent on carbon dioxide emission, and that's how we come to know about the car's benefit. It is there in chapter 4 employment income calculation, where details related to such benefits is like clearly given. Right? Okay, so I was like talking about capital allowances as in case of self-employed persons, be it a sole proprietorship or a partnership, I need to first figure out that what their accounting period is. As it is said that they have made their accounts for year ended 5th April 25. So this would mean that this partnership business has made accounts from 6th April 24 to 5th April 25, though they could have made accounts from January to December, from July to June, from October to September, but they have chosen those dates, those like months and dates which are exactly correlating with the tax year dates. All right. So I shall be making the columns AIA, FIA, general pool, special lit pool, asset with personal use, short life asset, and total. But I think I do not need to make all the columns. Why? Because it is only one asset mentioned in the question, that is called asset with personal use, right? So WDV brought forward, the WDV brought forward with respect to the only item which is car is given. It is what? It is 8,400 pounds, right? So this is WDV brought forward. And see, there are no other additions like given in the question. If there had been like any additions, then of course they were to be treated in different columns, as with asset with personal use and short life asset column, something which I've already told you that we will not be like clubbing the old and the new information together. Every piece of information shall have to be kept separate, right? Okay, so the same asset is being sold. At the point of disposal, we need to compare the cost and the disposal proceed, because lower of cost and disposal proceed shall have to be taken into account. In this question, the original cost is not provided. So I believe that whatever the price for which car is being sold, that shall definitely be less than its cost, though it's even WDV brought forward is another major indicative of the fact that even the WDV brought forward is higher than the disposal proceed. So definitely the disposal proceed must be less than their original cost. 5,400 is going to be deducted, and then whatever the value is going to be left behind, that if that turns out to be a positive one, it's called balancing allowance. If that turns out to be a negative one, it is called as balancing charge. See, here is a balancing allowance situation. Why? Because there has happened to be a positive figure left behind, but when I shall be taking up the amount of balancing allowance to be treated against trading profit, it's only the business portion of the asset that shall have to be taken into account. As it is said that the car is being used only for 30% for business purposes, so only this much amount is said to be the relevant one, right? As 70% of the car was being used for private journeys, but with capital allowances, only the business proportion is relevant. So that is only 900 pound. And how do we treat this 900 as? This 900 is to be treated as an allowable deduction. So against the trading profit figure or even the trading loss figure, this value shall have to be calculated. Okay, so now here there happens to be another calculation, as I'm just going to calculate the tax adjusted figure. as there is already a loss even before the deduction of capital allowances, could you see that the value of the loss is of £19,500? So 19,500 is already a negative figure against which I'm going to adjust 900. It is going to be deducted. So when two negative figures are going to be combined, technically they are going to be added into each other. So that's how the tax adjusted trading loss would turn out to be £20,400, right? So 20,400 is said to be the trading loss figure. Is this thing clear to each and every one of you? I mean, till now, if there is any ambiguity, please let me know. It's clear? Okay. So now we have determined the most important thing, which is the tax adjusted figure. If it had been a case of sole proprietor, then we would start thinking about how this loss is to be adjusted. But with partnership, once the profit or loss is adjusted, there we need to follow another thing, and that is apportionment of profits or losses. There we need to think about the apportionment. And here, apportionment will be taking a little bit longer time. Why? Because from the start of the tax year till 6th of July, there has happened to be three partners named Poppy, Rose, and Teasel. And then there happened to be a change. So if you have gone through the partnership recordings, you must have noticed that if there happens to be any change, whether the old partner is gone, a new partner would come in, or if there happens to be a change in the partnership sharing ratio, profit sharing ratio, or if the salary figures are changed, or maybe if the interest on capital would change in the midway, then the pre-change and the post-change profits are to be apportioned separately. So it's like Poppy, Rose, and Teasel, and then the column of total. As normally what we do is that first of all, we pick up the pre-change period. It's about 6th April 2024 till 6th July 24. So it's about 3 months. See, if 20,400 is the loss figure for 12 months, I need to see that how much loss figure is relevant to 3 months. So that's going to be £5,100. This is the profit figure with respect to, in fact, loss figure with respect to 3 months. Though with this, either it had been a profit figure or if it's a loss figure, we need to adjust the figure of 3 months salaries and 3 months interest and whatsoever the leftover profit or loss figure for after like making such adjustments, that is like going to be apportioned in between the partners, amongst the partners. But here no information related to either salary or interest on capital is given, so I'm just going to make an adjustment of this thing as it is. So it was said that the profits or losses have always been shared equally. That would mean that this £5,100 is to be divided over 3, as every partner shall be having the same portion, right? And then the post change period is to be taken into account, which is from 6th July 24 till the end of the period of account, which is 5th April 2025. I mean, now we will be talking about 9 months. So once again, the loss figure is of 2,400 for a period of 12 months, out of which now 9 months calculation is to be taken into account. That would become £15,300. And now as Teasel has left, right? As Teasel resigned on 6th of July 24. So that would mean that it's only Rose and Poppy which are left behind. And it is said that it had always been shared equally, which would mean that now there are 2 people who are going to share it in equal portion. So I'm just going to divide it over 2. And no information related to these 9 months would be relevant to Teasel. So this is like not the situation applicable on them. And here I will figure out that how much of the loss is related to Poppy only. Though I have wasted my time in doing the computation for Rose and Teasel as well, though it was not required because the question was about Poppy. Though practically the Teasel and the Rose must have determined their proportion of losses as well. They must be concerned about the adjustment of their own losses as well. But as here the question is just about Poppy, so we had to only spend time with respect to the share of loss to be determined for the person in question only. Okay, so this is like of 9,350 pound. This is the profit share. And as Poppy has got a loss, now I need to allocate the tax year. The whole of this period will be falling. See, the whole of this period, which is running from 6th April 24 till 5th April 25, the whole of this period will be falling, will be connecting to the tax year 24-25. So while making the main performer, as profit goes to non-savings income column, but here I shall write 0 because whensoever you experience to have a loss with respect to any certain source of income, against that certain source of income, we shall be presenting 0. And then they have also mentioned something about UK government securities gilts. Whensoever a person is going to receive an interest on gilts, that interest shall have to be taken as a part of our savings column. But again, here I'm not doing the segregation, which is why I shall simply be putting the interest figure under the column of total. It says on 1st of August 24, Poppy purchased £50,000 gilts having a nominal value of £40,000. Now the thing is, it is the nominal value which is a relevant one, as interest is carrying a very specific feature of being fixed in nature. So it's always the nominal value on which interest is calculated. And what the interest rate is, it is 3%. The interest is paid half yearly on 30th June and 31st of December. And Poppy sold the gilts on 31st of October 24 for £50,300, including accrued interest. So see, despite the fact he will be receiving an interest on first 30th of June and then 31st of December, normally we follow the receipt approach. I mean, we need to see how much of the interest is received in the tax year, but that amount which we receive will be apportioned if the gilts were not held for the whole of the period. I mean, if the investment was not retained for the specific period. As you could see, when the tax year got started, I'm talking about the tax year 24-25, the first installment date would have been due on 30th June 24, where Poppy did not have the investment at all because he first acquired the guilds on 1st August. So for 30th of June, whatever the interest figure is, that is not matching with this person. So no amount of interest shall have to be taken into account. Then the second amount was to be received on 31st of December. But then unfortunately, or fortunately, she sold the guilds on 31st of October. So on 31st of December, whensoever someone will be like receiving 6 months interest figure, out of that amount, the months related to August, November, September, and October. August, September, October, and November. These are those 4 months in which actually it's Poppy who had retained the investment. So 4 monthly interest figures shall be assessed on her. So I'm just going to take into account the interest figure. It's like 40,000 into 3% into, see, for how many months we are talking about? 4 months, as the interest rate is meant for a year. So 4 monthly interest figure shall be assessed on him. It is of £400, right? And the last information is related to their administrative procedure, the balancing payment, which has nothing to do with the computation of the tax itself. But once the tax is calculated, then how the tax liability will be paid to HMRC, either in a single go or it is to be paid in installments. This is like an administrative thing. So this has nothing to do with the calculation of income. Now we have taken into account our income. I am just going to take a total of my income. The total of the income is 68984. Against total income, we deduct interest paid on qualifying loans. There is no such information related to interest paid on qualifying loans. And then we need to adjust the current year losses. See what the figure of loss is. It is of £9350. So in the current tax year, as the loss is to be adjusted against the total income, again total income less qualifying interest, so this amount is going to be totally adjusted against the current tax year's total income. So what the income is going to be left behind, this would be of 59634. This is like going to be our net income. Against the net income, we will be deducting the personal allowance figure. The personal allowance figure is of 12570. After deducting the personal allowance, whatever the figure is going to be left behind, that is said to be our taxable income, on which tax liability shall have to be calculated. But here I will not be calculating the tax liability. Why? Because it is said in the question that we had to just determine the taxable income or the taxable amount, and we did not have to apply the tax rates. Is this thing clear? Now, the point is that could you see that first of all, we have shown the main calculation, and then once the main calculation was done, the workings were given. Let me just put the heading of workings as well. Right? So this is how you will be showing vertically the calculations once the main calculation is performed. Right? Is this thing okay? Now we have another question. Explain how Poppy's income tax liability in respect of her taxable benefit for the tax year 24-25 will have been collected, and if any forms containing details of these benefits will have been reported to HMRC. This part of the question is carrying 2 marks. All right. We need to explain that how the income tax type liability is to be handled in respect of the benefits which are being given to Poppy. I mean, how much of the tax related to these benefits shall have to be collected by HMRC, as it is like said in the question that they are being payrolled. That would mean that either there is a system of P11T, as in whatever the benefits are given by employer to employee, the information is provided on P11D to HMRC, and in the end, by the time the tax year would come to an end, the tax liability shall be calculated. But if they are payroll, that would mean that even a certain amount of tax will be collected, will be deducted on monthly basis under pay as you earn procedure, right? So if it is like being paid by deducting a certain amount of taxes from the salary of an employee with respect to the benefits already given to them, that would mean that in the end, when under the pay procedure a lot of taxes would have been paid, thereby employee shall not have to bear much of the tax liability at the end of the tax year. There could be a chance that all of the tax would have been paid under pay procedure, and by the time the tax year would come to an end, by the time he will have to file his return, no tax liability shall have been due. Okay, let me just show you the standard solution straight away. See, as because Poppy's benefit are payroll, the related income tax liability will have been collected under pay along with the tax on her salary, and payroll benefits do not have to be reported to HMRC on Form P11D or otherwise. Right? Is this thing clear? All right. Now we have the last requirement, which says that advise Poppy of the interest and the penalties that will be charged by HMRC as a consequence of her not making the balancing payment for the tax year 23-24 until 31st August 25. Okay. If we talk about the tax year 23-24, the tax liability shall have to be paid out in 3 installments. The first installment will be due on 31st of January 2024. The second installment will be due on 31st of July 2024, while the balancing figure shall be due on 31st of January 2025. As with the first 2 payments related to the tax year 23-24, they are talking about the payments on account. While if we talk about 31st January 25, this is basically the due date on which balancing figure was due. Now just keep this thing in mind that balancing figure was to be paid on 31st of January 25, but Poppy actually ended up on 31st of August 25. So that would mean that it's like after January, it's February, March, April, May, June, July, August. She is 7 months late with respect to the due date in paying her balancing figures. And see, this is the information that she filed a self-assessment tax return for 23-24, though it was done by the filing date, the due date was followed, but she did not make the balancing payment. And what the balancing figure for the previous year was, it was 2,600 until 31st of August. So she was like 7 months late. And she was not required to pay the payments on account. I mean, this was not like she has done anything wrong. She might not have been required under lawful reasons to not pay her payment on account. I hope you remember that if previous year's tax payable figure, tax liability figure 80% or more has been paid during the tax year, or if the tax payable figure was either equal to or less than £1,000, thereby we shall be left with no amount of tax to be paid off in the form of balancing figure. So, there is like left with no figure to be paid in the form of payments on account. So these are the lawful reasons, these are the legitimate concepts. If we follow them, if the conditions are fulfilled, then we are not liable to pay either of the payments on account. So it is just about the balancing payment for which we need to make a discussion. She had to pay this balancing figure on 31st of January, but she did not pay it till 31st of August. So she is 7 months late. First of all, if someone is like late for less than 28 days, then there is like said to be no additional penalty. If someone is late for up to 6 months, more than 1 month, more than 28 days late till 6 months, then they happen to pay an additional penalty at the rate of 5%, but she is like 7 months late. She is in between 6 to 12 months late. So she'll be bearing an additional penalty of 10%. 5 and 5, 10% of the tax payable figure. But along with that, by delaying the tax liability, by delaying any amount, any type of tax, one will be liable to pay interest, right? Default interest shall apply. So on 2600, she will first of all be bearing the burden of interest. The official rate of interest is the interest which is due to be paid on underpaid or overdue amount of taxes shall have to be applied over here, and not the official rate of interest. This is of 7.75%. But for how many months she has delayed in uh, paying her related tax figure, the balancing figure, this is for 7 months. So 7 months interest figure is first of all to be paid by her. And considering it's a balancing figure which is delayed, so she'll be bearing the additional penalty as well. So on 2600, she'll be bearing an additional penalty of 10%. So this is how the overall penalties and the interest she will be liable to pay. Let me just take you to the standard solution straight away. All right, it is there. So it's like interest is going to be charged for the period 31st January to 31st August. So for 7 months, so interest will be charged. See, 2600 being the amount of tax. The rate of interest is 7.7%, 5% of, and with respect to 7 months, the interest is going to be charged. This is like equivalent to £118. And this is said that two penalties of £130. 2600 into 5%. But what did I write? I said that you will be paying 10%, 5 and 5, 10% of 2600, which will become 260. So either you say that 2 times you will be paying 5% of the tax payable figure, the balancing figure, or you will be saying you will be paying 10% of the balancing figure. Either way, it is the same and the correct thing, right? So 2 times you'll be paying 130, or simply you will saying that you will be paying 5 and 5, 10% as in the form of additional penalty. So it's like £260. The double of 130 is 260. And this is like the additional figure one has to pay by delaying their balancing payment figure. Is this thing clear? All right. Is this thing clear to each and every one of you? Okay, now students, the time has come to wind up the session. If you people have any question, queries, any concerns in your mind, please let me know by dropping them in the dialog box. And secondly, though in this week we had to discuss the questions related to CGT, but considering that I have checked that not majority of you have started even watching the videos related to CGT, which is why I am deliberately not going through those questions. But from next week, I mean, on next week, when we'll be meeting again on Saturday, I shall definitely be discussing those questions, right? Is there any question? All right, so the time has come to wind up the session. Have a happy weekend. Goodbye.